Dave, welcome back to the show.
Great to be here.
Appreciate it. So let's first start off with what some analysts are calling a blockbuster quarter. Blowout was the word used by one analyst. So what are you most proud of here?
Well, we're an AI lending platform, and the last year has clearly been a difficult one for banks and lenders who are our partners. But I think we're able to show that AI is an area of technology that can help banks lend responsibly even during tumultuous economic times. And the success of our business, the success of our bank partners, and the growth that we're experiencing through this really tricky time in the economy, I think is a great proof point for us.
Now, what do you see in terms of the fluctuations from economic stimulus and the backdrop for the economy improving? Do you see that as having played a role in this trailing quarter? Is that something going forward that will show up? And then how does it show up?
Yeah, there's a couple of macro factors out there. There's still some elevated risk out there in terms of trying to understand high levels of unemployment and things that make banks generally reluctant to lend. But at the same time, as we've seen, the consumer is actually doing very well. Saving rates are up, and that makes demand go down. But when you put this all together, a platform like ours really thrives in this environment. We understand in our AI systems can model the risk, and we have enough automation that even though there may be less demand industry-wide, we're gaining very rapid market share because we have a very modern, very AI-driven system.
What's most important for your metrics right now as a new public company? Is it the amount of people who are on the site looking for loans? Is it the number of large financial banking partners? Is it the volume of deals that you're facilitating?
Well, as an AI-driven company, really it's how fast can the models learn and get better at what they do. So that translates to consumers applying, getting referred to our bank partners, getting loans, making repayments on those loans. So for sure, we are without question a growth company. Our guidance for 2021 supports that. But we're also able to do that profitably. And in the fintech world, revenue is easy to come by, profits much less so, but we're really pleased to be able to deliver both.
Now, walk me through that part again when you say the AI-driven platform and how you measure the success of it is what again? How quickly or how accurately it's putting a lender with a customer? What is that kind of metric? How do you quantify it?
Sure. Our platform essentially is an AI system that mitigates the risk of lending by identifying who will pay back a loan and who won't, pricing loans appropriately, automating the process. So getting better by our metrics is how many people, what's the conversion between the number of people that apply for a loan who actually end up getting it. That's what we think of as our funnel. And the better our system gets, the higher fraction of people we can convert successfully through that process and turn into customers for our bank partners. And that's the root of how an AI system gets better. More data, more training, and it just keeps getting a little more accurate. And we're seeing that dynamic, play out every day.
One of the things that I've kind of wondered since our last discussion and now after seeing the success of the numbers from this report is why would a large bank, a highly competitive lender, not want to just kind of take your business in as a way to capture lost kind of opportunity from what you're doing, which is better matching competitors? I mean, this seems like a tech that a large financial firm might be interested in having all to itself. Is that something you've considered? Or I'm sure you have. I mean, is it a possibility?
Anything's possible. I think our business has a bit of what I just call a belief adoption curve, which is our confidence in our technology and where it's going to take us is always several steps ahead of anybody seeing it from the outside. So I think we make sense as an independent business, really pioneering in the idea of AI lending. And we welcome all the banks in the world to come work with us and benefit from it. I think that's going to be a natural way for banks to interact with this technology, is to have the right technology partner to deliver it to them.
One of the things that you told me last time is that the type of customers generally that you're enabling to find loans are of lower credit quality, right? Generally ones that banks would kind of miss. I know that's not the only part of the customer base, but customers that banks might have otherwise not understood they could lend to or didn't. So how does that going forward subject itself to any other macro risks? I mean, are we going to be looking at Upstart as kind of a way to gauge the health of the lower kind of income bracket of America?
Well, we're a very broad-based platform, and generally we can help banks approve people for loans that should be approved, but also price them appropriately. So it's not really just about bringing more people into the fold, which it definitely is. It is an inclusive platform that helps banks, serve the American consumer much more broadly, but also do that in a profitable manner. So I think this is the future. This is, a bank does not want to lend people money if they can't pay it back. It's not good for the consumer or the bank. And at the same time, they shouldn't have to overcharge people because they don't really understand the level of risk. And so AI lending really comes down to pricing each loan accurately and doing something that is really to the benefit of the consumer as well as the bank. And I think there's a very bright future for AI lending across almost every category of lending.